Is dollar finally ready to give us the bullish move that we have been waiting for? So that's what we're going to cover in this weekly outlook video. My name is Sharon Kessio. If you're new, welcome to the community. We do this weekly outlook video every Sunday, and in this video I'm going to cover the bias for the week, draw of liquidity for price, and PDRs, which will be used as point of interest to support our bullish bias or bearish bias. So we're going to start with the dollar index, and in this dollar index we're going to start our analysis from the monthly time frame. So if you look at the monthly time frame, you can clearly see the whole of last year actually we had all this bearish momentum and this consolidation. Okay, so far what price did when we had all this bearish momentum, you can see price has made a new lower low, and we have that, which is also market structure shift. That's what we have. And we say most of the time when price creates a new lower low, this market has already created a new dealing range. So anytime price creates a new dealing range, at that point you can call that market really expensive or really cheap, depending with if it's a bullish move or a bearish move. In this case, because it's a bearish move, we're going to call this point here really cheap. So if you're going to sell, you wouldn't want to sell at this point. The best place you want to sell is when price is retracing to a premium PDRA. And in this case, if we take look at this high to this low, so the highest point is here and the lowest point is here of this new dealing range, you will realize that 50% of this range is where we have this fair value gap here. So this fair value gap will act as a premium PDRA. So remember, when you're selling, you want to sell at a premium, and when you're buying, you want to buy at a discount. So for us to continue selling for dollar index, the best place to sell from is once price gets to this premium fair value gap right here. Currently the market is at this point. It means our draw of liquidity is this fair value gap, and we have this buy side liquidity. Before we proceed, if you want to learn how to break down the market from the higher time frame to the lower time frame using ICT SMC concept, you can join the ICT SMC trading bootcamp. It's live classes and all sessions are recorded just in case you miss a session. So you can see these are some of the reviews for some of the students who have participated in this program. I'll put a link in the description box below. So let's look now at the weekly time frame. I want you to see, do you see how looking at the higher time frame, in this case the monthly, has really simplified for us identifying the bias. So right now where we stand, we know our draw of liquidity is this buy side liquidity up here. But now if we move to the lower time frame, what we want to look for, we want to see first of all the structure and how price is behaving, and then we need to also get confirmation that price is lining up to our draw of liquidity, because for us to start buying dollar, we will also need the lower time frame to line up bullish. And if you look at this weekly time frame, you'll first of all see we had price actually took out all these liquidity. So this was a liquidity sweep here, or liquidity grab. Once we got that, you'll realize that on the weekly time frame, price has also made a new higher high, because if you're going to look at this, you can see we had this low retracement, lower low, getting that lowest point, and so far that is what has happened. So we can call this again on the weekly time frame. This is market structure shift, because the market has broken structure to the upside. So we have a new higher high that has been formed. So that means what is that? That is a new dealing range. So because we have a new dealing range that was created at this point here, of course, the next thing you expect, if you want to continue buying, because of course we are buying a dollar, you also don't want to continue buying when price is at a premium up here. The best place you want to buy from is at a discount. And if you look at this dealing range created, if we take our fib tool and measure from this low to this high, this is the highest point, you will see that 50% of the range is where we have this fair value gap right here. So do you see this fair value gap acts as our discount PDRA? And most of the time, whenever you have such a long week, we can also just do it that way. Even if we do this way, you can still see 50% of the range still is around here. So which means if you want to continue buying dollar now on the weekly time frame, you want to buy from a discount PDRA. So we have this fair value gap here. And if you've been following me for some time, you know very well we have been anticipating. This is the move that we have been looking for. And finally, price has gotten to this fair value gap. So from here, the next thing we expect is bullish momentum. So we need now all lower time frame to start aligning bullish after price has already tagged this. And if that happens, of course, now that means you're going to have a bullish bias bullish moves until finally price gets here. And actually this is how people end up getting swing trading movement, because once price tags this, you can move to the 4-hour time frame or whichever time frame, look for confirmation, get your proper entry, and that's how people can do swing trading, and you can hold all the way to these highs here. So now let's look at the daily time frame. If you look at the daily time frame, of course, you can see all this was just a retracement to this weekly fair value gap right here. And you can also see on the daily time frame, there's also a fair value gap right here, which actually has been respected by price, tagged it, and you can see finally we've been having this bullish momentum. So if we look at the daily time frame, you can also see there was a fair value gap right here, and this fair value gap got inverted by price. So that's the point of interest that we're now looking at. And Friday we had all this bearish momentum. So this bearish momentum for Friday, I would consider it as a retracement. So this inversion fair value gap here is a very important point of interest. So I want this to be used to support the bullish momentum, because so far that's the PD array that we have. We also have an order block right here. You can see the moment we had all these consecutive bullish candles closing above this high, this forms an order block. So let's look at USDCHF. So USDCHF and dollar index are positively correlated. So if you want to see a bullish dollar, it means also USDCHF should also be bullish. And if you look at USDCHF again, it's similar to dollar. You can see on the monthly time frame, we had all this bearish momentum. Price has created a new dealing range because we have a new lower low that was created by price. If you take our Fibonacci tool from this high to this low, you can see 50% of this range is up here. So if you want to continue selling, the best place to sell from is where? From a premium array, from a premium. You can see on this premium side, we have this fair value gap, and we also have this order block right here. Now, so if it means our draw of liquidity is bullish because we want to see a retracement to a premium before selling, then if we look at the monthly time frame where price is right now, you can see the last month we had all this bullish momentum. Price inverted this fair value gap. This month we have only 4 days left before this candle, the monthly candle closes, but you can see there's an inversion fair value gap here, which actually has been tagged by price this month, which is good sign. So we want this inversion fair value gap to act as support and push price higher going forward. So if you look at the weekly time frame, you can see again the same thing on the weekly. You can see price made this high, although we did not really get a candle closing above this high. It's just wicking to this high, but that's okay. You can see this is a new high, and so far you can see price has retraced to the monthly inversion fair value gap. And also, apart from the monthly inversion fair value gap, you can see on the weekly time frame there's this gap here, which actually price also tagged. So if you're expecting a bullish momentum going forward, you want to see that happen. So let's look at the daily time frame. So if we look at the daily time frame again, all this bearish momentum was just a retracement to that monthly inversion fair value gap, and also on the weekly there was that volume imbalance, which is that gap. So far price tagged it, and we've had all this bullish momentum last week, which is good. That's what we want to see. We want to see price lining up bullish. So if you look at this, you can see there was a bearish fair value gap, which actually got inverted by price, which is good. And apart from the inversion fair value gap, we also have a volume imbalance, this gap here. So anytime you see a fair value gap and a volume imbalance, you can mark all it as one. Okay, so which means, of course, you can see price right now, it's here, which is good. So going forward, after price has made this new high, we want to see a retracement before we see that bullish momentum. And you can also clearly see there's a tiny fair value gap here, a bullish fair value gap, and we also have an order block right here. We want to see price can get to this fair value gap in this order block before we see that bullish momentum. I want us to look at EURUSD. So EURUSD and dollar index are negatively correlated. So that means if dollar is bullish, then you want to see bearish EURUSD. And if you look at it from the monthly time frame, you can clearly see there's a similarity with the dollar index, but now inverted, the opposite side. You can clearly see last year we had all this bullish momentum. Price has actually formed a new higher high, and also, which is also a new higher high. You can also see market structure shift because we are from a low here. So market structure shift, break of structure, all that. So we have a new higher high, and that means price is at a premium, because you said anytime price breaks structure to the upside or the downside, you anticipate that that market is really premium or discount. So, and of course, in the process, a new dealing range has been created by price, so which is this one right here. So if you have this new dealing range, you can see 50% of the range is right here. And where we have 50% of the range, you can see we have an order block, which is here. And you can see there is a bullish fair value gap right here. So that means if Euro USD is still bullish, we don't want to continue buying up here, because up here we consider this market really expensive or a really premium. So the best place to buy is from a discount. So for us to get the best buying for this market, we would want to see price actually retrace to this fair value gap, this order block, before we finally get that bullish momentum. So if that is the case, where price is at the moment, you're going to see our draw of liquidity is this internal range liquidity, which is a fair value gap. So let's look at the weekly time frame. So if you look at the weekly time frame Euro USD, again, you can see the same thing as dollar, but now the opposite side. You can see price has made a new lower low. And here I would call this market structure shift, breaking structure to the downside. So in the process, what has happened, price has created a new dealing range. You can see if you take your Fibonacci tool from this low to this high, you can see we have 50% of this range is here, and you can see we have this fair value gap right here. So this fair value gap, we can say it's a premium PDRA. So if you want to continue selling, so we have this. Remember, our draw of liquidity from the higher time frame is bearish, and you want to see price get to the monthly fair value gap. So if you look at it, you can see price made a low. Then we've had a retracement towards to this fair value gap, and you can see price has not violated this weekly fair value gap. It's still inside this weekly fair value gap. So far, price has already tagged it on the weekly time frame. So the next thing we expect is what? Is for the market to continue going lower, and we'll be looking at bearish momentum until price gets to our draw of liquidity, which is this monthly fair value gap. So let's look at the daily time frame. On the daily time frame, you can see so far price is giving us that bearish momentum. We had this low retracement, and price has made a new lower low. So you can see in the process so far, what do we have? You can see there's a tiny fair value gap right here, and also we have an inversion fair value gap here. So this inversion fair value gap, we got this inversion fair value gap the moment this candle closed below here. So far, I'm looking at this as a PTRA that I would love to see actually be used to push price lower. So if you're going to have more retracement, you can use this to push price lower, or price can even use this to push price lower and fail to get to this high here. So let's look at GBPUSD. So GBPUSD and EURUSD are positively correlated. So that means whatever you want to see for Euro, the same for GBPUSD, and the opposite for dollar index. So, okay, so far you can see GBPUSD on the monthly, the moment price made this new higher high, we got a break of structure here. You can see actually for GBPUSD price retraced to this fair value gap. Okay, so far EURUSD price has not given us that retracement, but GBPUSD price has done that. So if you're going to get a bullish dollar, then GBPUSD should still be bearish. So if that is the case, then we are likely to get more bearish momentum for GBPUSD, or it may just end up consolidating until finally EURUSD and dollar index price gets to the PDRA, or it might still come back lower, come back to this PDRA again. So let's look at the weekly time frame. If you're to look at the weekly time frame, you can see again price swept this high, then we had all this bearish momentum, market structure shift. At this point, you can see a new lower low has been created by price, so which means this is a new dealing range. And in this new dealing range, you can see 50% of this range is where we have this inversion. We have an inversion fair value gap here, and there's also a very tiny fair value gap here, which actually that's what has happened. Price has actually tagged it. This is the point you want to sell from, because the market is really at a premium. So let's look at the daily time frame. On the daily time frame, you can see we have this inversion fair value gap the moment we had all this bearish momentum, and so far you can see price is actually in the inversion fair value gap. So for more bearish momentum, it would be nice if we get price reacting from this, giving us that bearish move. So let's look at gold. If you look at gold, of course, you know, most of last year gold was really bullish, and so far what we have had all this bearish momentum. And after price giving us this bearish momentum for gold, you can see it left behind this weekly fair value gap. And for those who've been following me, you know very well, I've been telling you, as long as price is in here and it's giving bearish structure, I'm looking high probability moves is bearish move for gold. However, the day gold inverts this weekly fair value gap, then at that point, it's a high probability that gold is ready for a bullish momentum. So let's look at the daily time frame. On the daily time frame, you can see where we also have the weekly fair value gap. There's also this daily fair value gap, and we also had a weekly order block right here, which actually got tagged by price. And then if you look at the daily, you can see last week price actually inverted this fair value gap. So right now here we have an inversion fair value gap that got tagged by price. So far, I'm looking at this inversion fair value gap as a point of interest. For more bearish gold, we don't want to see price invert this. If you can get a retracement to this high, price should not invert this. This should be used to continue pushing price lower. Also, we have this order block which has already been tagged by price. So let's look at NAS 100. If you look at NAS 100, you can clearly see so far we've been having all this bullish momentum. And so far on the weekly time frame, you can see NAS 100 price has left behind a fair value gap. And actually, we've created a new higher high on the weekly time frame. So at this point, you can say NAS 100 is at a premium. If you want to continue buying, it would really be nice if you get a retracement to a discount and then we buy from that level. So far you can see we have this bullish fair value gap. So for more bullish NAS 100, it would really be nice if we get a retracement to this weekly fair value gap before we see that bullish momentum, because at that point price will have retraced to a discount. Okay, you can see 50% of the range is where we have this fair value gap here. If these get inverted, then of course, you know, definitely price will be going for these lows here. And for us to anticipate that bearish move or retracement, of course, we want to see on the lower time frame price lining up bearish. Once price starts lining up bearish on the lower time frame, then of course you have your draw of liquidity. The first draw of liquidity becomes this fair value gap. If it's still more bearish, the second draw of liquidity becomes this fair value gap, which is now at the discount below 50% of this dealing range. So let's look at the daily time frame. If you look at the daily time frame, of course, you see definitely this market is really bullish and keeps making new highs. Now, so far we have this order block here. If you're not going to get a retracement, then this order block can be used to push price high, because this is the PDRA that we see on the daily time frame. However, for me, what I want to see, because it's really at a premium, the best place to continue buying from is when you get a retracement to a discount zone. I would really love to see actually price invert this, and we get that bearish momentum to this weekly fair value gap. And you can see where we have this weekly fair value gap, we also have a daily fair value gap here. So this becomes my first draw of liquidity. And again, we said before price starts giving us, you need to see price lining up on the lower time frame. You need to see the lower time frame lining up bearish. You're getting market structure shift to the bearish side, break of structure to the bearish side. That is enough. From there, you have enough PDRAs that you can work with for a bearish NAS 100. But as of now, you can clearly see NAS 100 is really bullish, strongly bullish. So that's all I see for NAS 100.